And then we've got your standard liquidity downturn, but then we've got a business cycle downturn on top. And you sum that all. Maybe some people say, oh, we'll only get a 50% bear market. Yeah, sure. If that was every other normal cycle that Bitcoin's existed in the 16 years. But we don't know this thing called a business cycle downturn and its impact on Bitcoin. And Bitcoin happens to be the most sensitive of all the global macro assets to liquidity changes. If we've got that, then we don't know how that, add more drawdown to the 50% you think, whatever number you come to. So that's how I'd approach it.
Bitcoin's market is showing strong structural resilience despite its multiple challenges. Unlike past cycles that saw sharp drops, this time a more robust market structure is helping absorb shocks better. Currently, Bitcoin is also dealing with a typical liquidity downturn combined with an overall business cycle slowdown, something it hasn't faced before. This new layer of economic pressure makes it uncertain how much deeper the market could sink beyond an expected 50% pullback seen in previous cycles. Bitcoin remains highly sensitive to liquidity changes, more than most global assets. This means shifts in money flow and broader economic cycles can strongly impact its price movements. With Bitcoin currently trading around $113,000, investors are watching closely for signals of how the business cycle will affect future trends. Market analyst Willy recently explained this superposition of factors, highlighting that while the market is resilient, the added stress from the economic downturn creates more risk. The combination of liquidity tightening and a slowing economy could deepen price corrections. However, this complex setup also shows a maturing market that may respond differently than before. Stay tuned as we bring you more clips from Willy Woo's recent interview. Please don't forget to like, subscribe, and enable notifications for additional in-depth content. Thanks for joining us again. Enjoy the video.
What do you think of how the Bitcoin market's matured since 2023?
Oh, I mean, so much, right? I think the biggest thing has been BlackRock's ETF.
Mm-hmm.
I think before that, if you were to look at, in the bigger picture of $900 trillion of wealth assets, and Bitcoin at the time was only $1 trillion. Most wealth managers would be potentially risking their jobs, their client base if they recommended Bitcoin. And then when Larry Fink opened that up, he made it, he moved the Overton window in a way, kind of. Yeah, like a wealth manager could now recommend Bitcoin. And I was talking to, we work with a Swiss private bank, and the banker there, who's been there all his life, managing wealth, said that I had visited him a year beforehand, and he said, I'm not a believer in this Bitcoin stuff. A year later, after the ETF, he said, I just bought some. And the reason why he bought it was because I know exactly what happens with this. Once it's on that ETF, once BlackRock's on it, they're going to push this product out to the world, and everyone will market Bitcoin. And so I think in terms of Bitcoin going from 1 trillion to, that 100 or more that we all think about, that's the turning point. The industry's matured, the infrastructure's matured after FTX. Exchanges always wanted to hold the coins. Now it's even Binance is now offering custody solutions where the coins are held in a tri-party manner. It's not on the exchange and it's mirrored in. And so that's much more institutional. Mm-hmm. So that's rolling through. You've got people like Fidelity offering custody, and that's mirroring to the exchanges. So TradFi is coming in and hardening up the exchange rails a lot. And obviously, it's not my warehouse, but you just see how the new administration has just unlocked everything.
Yeah.
Everything can move forward. Bitcoin can be considered when taking out a real estate loan. There's a lot more coming, I think. The early signals were 2016, so it's another 9 years into it now. And it turns out that most of the stuff that we were doing, a lot of it's, it's good for narrative. Mm-hmm. You can say the whales are coming in and this sort of stuff. But in terms of pricing signal, there's only a small subset that really works, and but it works great, because like I see even today, a lot of people are tracking the flows into the ETFs.
Yeah.
Right. Well, it's only a subset of the flows. Turns out it's a minority, and
Why is that?
I don't know why. It's just, it's small. It's probably 1/5 to, that's significant, but 1/5 to 1/10 of the daily flows. Majority of Bitcoin that's flowing is naked on the network. It's not wrapped up in, equity wrappers. But even so, you can think of the ETFs in aggregate are just a closed sort of box. And if people are buying and selling inside that, it's neutral. If they want more, then more is coming across that membrane. That's a demand. And you can look at that. But we have something better, we have a UTXO set, and you can look at every single coin that's moving across the network. So you're not limited to looking at the small black box that's run on Wall Street. You're looking at the entire network. Just because someone's buying, or the family offices are buying inside these ETFs instruments, we could have Asian whales dumping by the tens of thousands and doesn't tell you much, right? Usually Asia's more sophisticated in the trade, historically. Asia has more capital. I think it's as an estimate, Asia equals Europe plus America combined in terms of liquidity.
Really?
Movements. Yeah. And you'll see that's starting to be recognized because post-COVID, token 2049 started blowing up, and I started seeing Americans, Europeans turning up to this Asia conference because there's so much that's happening there. But yeah, back to the point is that we have a UTXO set, so we can look at the flows across the entire network and know, the capital coming in any day of the year.
Are you surprised that like this bull market, I think one of the things that make it different to previous ones is that price is ripping, but mempools are empty?
Yeah, I haven't looked at mempool for a long time. And the thing is, like, I haven't looked into the mempool to go why.
But you must be seeing less activity on chain though.
I'm not tracking the stuff that's irrelevant to me.
Okay.
Right? The relevant things to me are wallets, right? Or the activity of the wallet. So I'm only now tracking liquidity flows. So I don't care if it's like 500 wallets instead of 50,000 it used to be. I'm looking at how much capital. The capital is what moves it, and that's getting bigger and bigger and bigger. So that gives you an idea of what's happening. Maybe we're moving to layer 2s. You might call an ETF layer 2. But ultimately, most people are finding use in not using the main chain, apart from a clearing chain, I guess, between all of these other layers. ETFs being one, I would say.
So you're seeing less transactions, but much larger transactions, which is obviously, that makes total sense with the kind of institutionalization of Bitcoin. Are you surprised that this cycle we've not really seen retail come in the same way yet? Or do you think that will still happen?
Yeah, I think there's been a few surprising things, right? I think retail will come in. I think that they've always been there. It's just they're not really moving the needle. And, every cycle we're roughly 10x higher, or in the early days, 100x higher in price, which also means, 10 to 100x more capital needs to move the price. And like the reality of the wealth distribution, when you talk about what does retail have, what does the concentrated capital pools, which still might be, owned by retail, but going through,
ETF wrapper or...
Yeah, or in a pension fund, or, it's retail money, but it's managed by a manager who's like deciding, let's put a 3% allocation into Bitcoin, and then boom, you've got, billion size tickets.
Yeah.
So I think those are the things that are mattering now. And like even if, talking to Daniel Batten, but the work he's done with pension funds, sovereign funds, looking at the capital pools they have, I think the number's around $30 trillion that they manage. out of that 900 trillion. And for a lot of them, they can't allocate to Bitcoin because they believe that it's bad for the environment. It's against the ESG agenda. So dismantling that, these are the things we have to dismantle in the industry, is all the barriers stopping the big capital pools, which are still owned by retail ultimately, but managed by professionals, for that to really come in.
Since 2023, the Bitcoin market has matured a lot, especially after BlackRock launched its Bitcoin ETF. Before, with Bitcoin valued at about $2 trillion compared to the global $1,000 trillion wealth, many wealth managers hesitated to recommend it. The ETF changed this, making Bitcoin more accepted by professionals. Even skeptical bankers have started buying it, expecting wider adoption once big firms promote the ETF. Infrastructure also improved after issues like FTX, with exchanges offering better custody solutions that separate coins from platforms, attracting institutional investors. This change shows Bitcoin's growing integration with traditional finance. While retail investors haven't had a big impact yet, larger capital pools like pension funds are increasing their involvement, despite ESG concerns slowing some investments. Market activity now includes fewer but larger transactions, reflecting growing institutional participation and use of Layer 2 solutions. Let's watch more clips from Willy Woo's interview.
The economy's hit the Titanic, hasn't sunk yet. There's more like leading indicators, you could say, than that one. The one that we've hit the Titanic, that's already fired. There's no going back. There will be a business cycle downturn. But we're not there yet. It's not sinking. And that's the best part of the bull market. Everything goes apeshit crazy and we'll have a blow off top, right? And we're expecting that in Bitcoin too. Everyone's expecting that because we're not there yet. But it will be coming, And even the 4-year cycle guys will say it's coming in 26 because of standard 4-year liquidity flows. Superimpose on top of that a business cycle downturn, which Bitcoin's never experienced, then we've got to see what happens. This setup, right, liquidity cycle coming back down, business cycle downturn, we've got our treasury companies on top that are exhibiting high MNAVs. So if you're holding those equities, you're going to have that compression. And then we have the potential for these Bitcoin treasury companies, the weakest ones, to be liquidated if they're overextended. Because these guys are doing, like 4-year bonds, convertible bonds, or some of them not at all.
And when you're looking at kind of Bitcoin price, how high do you think it can go before this drawdown?
It depends how long we've got to run, If it's soon, like if it's fourth quarter of this year, and if it's early first quarter, then 140 to 160. If it goes into 2026, then, it could go way higher.
So one thing I've been thinking, which may be too simplistic, is like if you look at the incentives of someone like Trump, who's got the midterms, I think October next year, or like third quarter next year, he's going to want to run the economy really hot going into that.
Yeah.
So I assume he's going to pull out all the stops to make sure markets are flying. And so in my head, I've kind of had late 26 as the top of this cycle. Right.
Yeah. You can see this already is that Trump wants lower interest rates, but Powell's like, nope. And the thing is, never mind how much power Trump has, he doesn't have the power to influence Fed policy. And for that to happen, the Republicans would have needed to be in power for 12 years and outvoted the Democrats on who gets to be on the Fed board and have that qualified by Congress. So it's a pretty full-on thing to get full power of the Fed, and it's designed that way. So he could try talking it up, but unless, the Fed actually changes rates, and in our opinion, it's too slow anyway. It's probably too late. The liquidity injection should have happened a long time ago, and it's late. And the rest of the world is injecting liquidity, not the Fed. So we'll see.
So other central banks around the world are printing money right now?
Yeah. Global liquidity is going up, but it's not coming from the US as such.
So do you think Powell's been wrong on this call to not lower rates?
Yeah, we think so. We think so. Henrik's very outspoken, saying this is a really bad setup right now, that he should be printing, and we don't know why he's not. The inflation's not so high.
Yeah, inflation's not. But like, we know that money printing does lead to inflation. And like, obviously Powell knows that better than anyone because he's been at the helm while that happened. Why do you think he should be printing money? Because it was great for us as like asset holders, but is it good for the population?
Oh, well, obviously printing money's bad, right? If like, I mean, on fundamental level, printing money is really bad. We know that as Bitcoiners. But in terms of an economy and how far it's going to wreck people in the short term, the role here, with the changing of the interest rates is really to buffer these really harsh drawdowns. That's the whole point of a central bank, is to try and take the pain out of the market. And that's probably not the best move for the role of the Fed. We can debate whether or not the Fed should be able to, dictate this. Obviously, as a Bitcoiner, I don't think this is a good setup.
So looking out, you're quite bearish.
Oh, I'm bullish over the next few months. Yeah,
Bullish, short-term bullish, long-term
bearish.
bearish.
The audience shouldn't do what I do. I participate in the markets. So if it's bearish, I'd love to have a really bearish market. And if it's bullish, I'd love to have a really bullish market.
Willy Woo argued that the economy hasn't reached a full downturn yet, describing it like the Titanic hasn't sunk, but the warning signs are clear. He explained that a business cycle downturn is coming, but we're not there now. He expects a big market surge, or blow-off top, in Bitcoin, possibly in 2026, linked to the usual 4-year liquidity cycles combined with a new economic downturn Bitcoin hasn't faced before. He disclosed that some Bitcoin treasury companies are financially stretched and could be forced to sell assets. He noted that while Bitcoin's market structure has changed, leading to lower volatility, he still expects a strong peak around late 2026. He thought the timing might be influenced by political events, such as efforts to boost the economy before the midterm elections. Regarding central bank policies, Willy Woo suggested that despite calls for more money printing to support markets, the Federal Reserve has been slow and cautious compared to other global banks actively injecting liquidity. He believes this cautious stance is causing strain, and that more aggressive monetary policy could have softened economic pain, though it carries risks. On Bitcoin's price outlook, he predicted it might reach between $140,000 and $160,000 if a downturn comes soon. But if the bull run continues into 2026, prices could go even higher. He admitted being short-term bullish, but remains aware that the market can change fast. What do you think will have a bigger impact on Bitcoin's price in the next year, the business cycle downturn or the liquidity changes? Let us know your thoughts in the comments below. Share this video and hit the like button. Thanks for watching, and don't forget to subscribe.